Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the euro currency. So currently we could say only one thing on the markets, that the help to the bulls have come from nowhere expect. So this is because of the big sales of the foreign reserves from the Japan and the China. Those of you who are tracking our Telegram channel, you know that a few days ago we talked about Japan. They have sold 50 billions of the reserves to support the yen. Now it's problems with the China. So in the China, there are few important moments. A few weeks ago we already mentioned the legislative act in the United States that forbids the specialists of the microelectronic to work in the Chinese companies. So the people have to make the choice. Either they will lose this United States citizenships, or they should to resign from the Chinese company. This is first moment. Second, the victory of the Mr. Xi Jinping put the United States and China relationship is very difficult stage. You know, the piking that stands already around the Taiwan, and in general recent relationships between the China and the United States are not really good. Besides, Xi Jinping is a follower of the more close economy in terms of the transparency. So we will see that China gradually is reducing the public statements and statistics on the Chinese economy. They making more close, and that's bad for investing and bad for investors. And you can see that in recent few days we have the big sell-off in China. Red Dragon index, this is the analog of the Nasdaq. This was a really big collapse, and sometimes it has reached a 20% drop in one session. Recently we've got the Hang drop of the 8%. Chinese yuan stands right now at the lowest level since the 2008, and China has already pegged it to the United States dollar. What does it mean, the pegging? The peg, it means that China has to absorb all the pressure that will be from the international investors who are leaving the China and selling the yuan, buying the United States dollar. So all this supply Bank of China have to absorb, and that brings a lot of United States dollar on the market. As you can see, that improves the situation of the liquidity. Also, we report about the big amounts of the reverse repo rates in the United States with the Fed from the commercial banks. That also provides big liquidity, and this demand is still rising. And all this stuff, all this dollarless liquidity is coming to the markets correspondingly. So supporting, making the actually taking off some problems with the liquidity, providing more dollars, is making rivals of the dollar to rise. So we can see the rally on all markets, including stocks. I mean stocks in Europe and United States, Forex, gold, and other markets as well. So on the dollar index you could see reversal on the weekly chart. Technically it's absolutely reasonable, so market has completed butterfly, hits overbought on the weekly chart. This is weekly chart, guys, and completed this ABC bottom inner butterfly XOP right around 161 in target of the butterfly. Technically this is absolutely normal for the United States dollar, the pullback. The question is whether we could treat it as some major reversal or something of that sort. Unfortunately, we do not know how long this necessity to support domestic currencies by the China, by the Japan will stay. And that makes the whole situation tricky to rely on this factor. But still, if we are tracking situation on the intraday charts, on the daily chart, we probably should get the first signs that this support is gradually housing. Technically, it's also currently impossible to say whether there's reversal on the dollars, just because take a look, this recent drop in United States dollars, well, absolutely corresponds and fits to the previous retracements of the same length. This is something like the harmonic swing. We need to get something greater, some more significant downward action on the dollar to tell that something is changing. But currently, well, all this stuff is fits to idea of the retracement on a high time frame, on a weekly, maybe even on a monthly. On a daily, yes, it looks like some short-term rally, it's with more extended targets and so on. But speaking about larger scale, currently we can't say that it's definitely something big, something big is changing. Besides, as you know, the Fed is not really step out yet from the rate hiking cycle. So they intend to raise rate in November, and probably current market expects that probably will be another 1-2 rate increasing from the Fed. That's of course will keep supporting dollar, and but we will see. So on the short-term charts, what we have, actually everything goes accurate with our trading stop. Market has completed the targets that we have discussed recently. 99, 25, 99, 50 level has been completed. The market now is breaking the confluence, which is provides good background for the bulls, suggesting that we easily could get the acceleration and continuation to the OP target. So until 150, market is not actually has no barriers. So this is the verbal stands around this level, and OP around 101 has good chances to be completed actually right there. So we could get this ABCD pattern on the daily chart. That will be the next target that we intend to keep an eye on the follow time frame chart. Here, an acceleration to our OP target that we discussed recently looks nice. Retracement yesterday indeed was just to the 30% level as we discussed, and the acceleration to OP tells that there's really good chances the market will keep going to the XOP. Take a look at that, as we said, be prepared that this catalyst triple to sell could turn to the butterfly, and indeed that's now is going on. So this market is moving above the OP. XOP perfectly agrees with the 1618 target of the butterfly, and actually it's also 101 that perfectly also matched to OP target on the daily chart. So that's actually what we have currently on euro currency. On the hourly chart, we could consider a few levels of the pullback if it will happen at all, of course. So I once again wouldn't consider too significant retracement. So it probably should be either this level, nearest one, or that one. So here is actually good clusters. First we have the confluence, and take a look, major 30% support on the whole upward action. So that's also interesting level from placing the stop orders below it, and take a look. It also agrees with this natural support resistance. So previously it was some natural resistance level, after which we've got this ABC retracement that we discussed last week. So maybe it makes sense to consider taking position right there with the stop somewhere below this level as initial setup to consider. So if no retracement will happen, then probably market will directly keep going higher to next destination point. So this is what we have currently on euro.